Okay, we're here, as you can see, in the floor of the New York Stock Exchange. Today is Thursday, January 15th, 2026. It's great that we have in this conversation our great friend Steve Allen Lawrence, who's the Chief Investment Officer of Balfour Capital Group, and we're also bringing a great Latino, a Brazilian, Eduardo Rolla, who's the founder of Zsys Capital. And the important part here is that now we're going to have a Latino telling us about the perception of what's going on in the capital market. Eduardo, thank you for coming. We might speak Portuñol, but because this is going into this English audience as well, the people that speak English, we're going to keep it in English, okay? But I would like you to tell the audience quickly what you guys do. How do you feel you can describe better Zsys Capital as a family office, as a fund? That way we all understand what are you guys doing from there, and then we'll start interacting on what is the core values that you are seeing people is missing these days, okay?
Awesome. Muito obrigado. And thank you for your kind introduction. And thank you, Steve, for the opportunity. My name is Eduardo Rolla. I'm the founder of Zsys Capital. We are in the market for the last 18 years. We are Brazilian, of course, as Victor mentioned, but we are a London-founded company during one of my partners' PhD. This idea come up, and we decided to do this for our own family. Do what? Do quant fund management using math and math models in a global level to manage funds globally in Brazil. And since the last 10 years, we've been managing funds successfully with as a fund managed service provider, okay, to another London-based firm. But now, a few years ago, we decided to launch our own funds. So we have 5 funds under management in Brazil and 1 that we manage globally. And the results and the risk-adjusted results speaks for itself, okay?
Yeah, and let me just interject something, because I think one of the things you're going to see with Eduardo, okay, they're audited by BDO Seidman. I think one of the things that you're going to see that the public really needs to understand, humbleness brings success. Okay, and I think you're going to see with Zsys, okay, not only do they understand the math, they understand people. And I think that's the most important part. They understand people. They obviously, we both understand the markets, and we've made some great calls. And I also believe that a company like Balfour, who has access to world-class wealth advisors, all right, to bring his product to market is absolutely the right time.
What I wanted to do, Steve, I think it's important for the audience, is we were discussing that these days a lot of people are super invested in ETF, which is what is called passive investments. And sometimes it's not the best way, Eduardo, also to discover and capture alpha, which at the end of the day is what these managers are looking for. How you can be, as a manager, a triggering point to provide best returns for these potential high and ultra high net worth individuals. So if you can define, and first I'm going to go with Eduardo, Steve, and I know you have an alliance between Balfour and Zsys. If you can define, Eduardo, what are the core competencies that you're seeing out there to exploit active management instead passive, that would be great. And then I will corroborate that with Steve, because at the end of the day, with the Dow Jones, remember today's Thursday, January 15, 2026, with the Dow Jones barely going below 50,000 with rumors that we can get there soon, people is a little concerned that we might trigger at some point a potential, where those highs might come down and it represent a potential cascade of sales just based on technicals and based on geopolitical events. If you can tell us that, that would be great.
Well, this is a great question, Victor. Passive funds, ETFs, call it what you as you want, was a great solution. Okay, in the beginning of this century, was a problem to solve. 90% of the active managers at that time do not beat the benchmarks in the market. So was Americans were so inventive. So was a great solution. It's cheap, it's easy to allocate, but it's not perfect. That's the point. Okay, when you are allocated in passive funds, you need to endure all the drawdowns that markets suggest us. What we propose, it's a different approach. It's let's say an evolution to ETFs. It's a next step. Enhanced indexation is a math applied technique that optimizes the allocation of the passive funds and create a way to protect investors during these times that we are expecting in the future, and it's possible that happen. We have many complex events that could trigger some kind of sell-off in the market, and we need to be prepared for this kind of situation. Okay, that's why using the proper techniques, mathematically applying to the investment decision is considered for the ultra high and the other, let's say, big investors as a way to protect themselves in long-term investment. Okay.
Very well said.
Steve, we're here in the floor. We're here in the floor. You've been here with me. Tell me where you see opportunities, because obviously what he's just explained is great, using some sort of methodology, which is at the end of the day what is going to bring results. Tell us about it, please.
Listen, yeah, well, it was very well articulated what he said. What at the end of the day, there are going to be massive moves right now. Okay, massive moves. You've seen it in silver. Massive. These are, biblical moves in the market. All right. And Zsys in their quant department understands it's never going to be how much you make. It's always going to be how much you lose in managing risk. Okay. And it's understanding the long-term risk model. What do I see right now? We see what we see right now. We see fear. We see greed. Okay. We see the media. Every day there's a new story. All right. But the reality of the story is this. How does the public, how does Mr. Jones, how does a company like Balfour protect its wealth advisors and its clients? By having diversification. It's okay to miss a winner.
Listen, okay. if you have to define, Eduardo, remember we have this audience that is seeing this and now understanding how Balfour, that is an well-known international asset manager and wealth manager, is tapping into Latin America with the size of partners like you. If you can define in 3 weekly bullet points, where do you see opportunities in this 2026? That would be great, because at the end of the day, it's very difficult, Eduardo, to forecast market, but we need to try to see where the opportunities are arising, even though that we might be wrong when we put this interview in 5, 6, or 7 months, or better, if you are right. Define that for us, that it will be a great opportunity for the audience.
I will get one of a good point that Steve raised. The word is understanding. What the most investors are seeking to translate data into information. Okay.
Yes.
If you invest through professional global level mathematical models, it's a bit different, right? You are usually through these models translate data into understand or comprehension. Okay, that's why you need to be allocated with professional global level models. Like I will raise you an example. Warren Buffett has a model, but it's inside his mind and his crew. Our difference, the main goal, the main, let's say, chance of success is in the process, is in the way we do our research and development, process to create these models and to avoid, let's say, some kind of misunderstandings in tricky moments of the market, like everybody's running through a specific site, and we are here with an important upside, as Victor mentioned. Okay, so that's why we need to assure that the model understands the drawdowns and how to react on this. That's why the best position to be is allocated with a quant professional fund. Okay.
No question about that. All right, and I think one thing that you'll see about both of the synergies is that the math can tell you one thing, okay, but you got to know how to override the math, all right, with the fundamentals, okay, and that's really the key point, okay. It's like the math can tell you one thing, all right, the numbers can tell you one thing, but what's the psychology behind entering and exiting something? When there's a drawdown and when you know that there's real value, all right, and you're down, okay, and you panic, all right, you can't panic if you actually know the fundamentals, but the math and the synergies of the human factor will never ever change in the markets.
Steve, keeping with you and wrapping up on the interview, if you can let us know what are the three best ideas so the audience can understand for the first quarter of 2026, that'll be great. Then obviously start thinking, Eduardo, I'm going to finish the interview when you answer the best three idea. You can tell us about asset classes, but it's extremely important because at the end of the day, people is looking for ideas. And even the wealthy guys are always looking for managers that perhaps can consistently deliver good ideas. Steve, tell me the three best ideas first quarter 2026.
Three best ideas in 2026. The first one is, I am very bullish pharma. I really am. I really like rotation in high quality pharma companies, and there's a lot of high quality pharma companies out there. Second idea is anytime you see a move anywhere between 2 to 5% on the big stock, on the big technology names. I'm talking the Metas of the world. I'm talking the NVIDIAs of the world, the Oracles of the world. It's an opportunity to buy. All right, a buy. And the financials are the trickiest part of the market. Right? It's a very tricky part of the market. If you're going to be in a financial stock, meaning a BlackRock, a JP Morgan, your horizon needs to be long term. You can easily see some of these things come off to, 8 to 10%, and you can get scared out. But over the long term in the sense that, like Buffett says, 10 to 15 years, you will succeed. All right, those are
excellent. Eduardo, wrapping up here from the floor of the New York Stock Exchange. You have 30 seconds to tell us your best three ideas for the first quarter, and we will revisit that soon. Tell me from Sao Paulo, Brazil, which I love Brazil, and I'm going to do portuñol. Poquitinho, ¿eh? ¿Cómo me están las mejores ideas? ¿Cuáles son las mejores ideas? What are the best three ideas?
Well, do not always consider emerging markets, especially in a situation like in 2026, because we have Fed promising liquidity in the market, so risky assets would be great at this time. We can be prepared for all situations. So I agree with Steve that I'm bullish this year, but be prepared for the worst as well. Okay, that's a good point. And have, as an investor, always have a model, okay, or rely in some professional model. Do not go with the rest of the running. The bull indicates the direction. Do not fail to rely on your own ideas as investors. Study and keep up to date. That's what we indicate to our clients all the time. Okay.
Excellent. Listen, we're here in the Florida New York Stock Exchange. We're happy we gave you both. So thank you very much. Today, again, for the record, is Thursday, January 15, 2026. We're gonna speak with you more about what's going on. Eduardo, thank you for staying with us. Steve, pleasure as usual. We'll speak with you guys soon. Thank you very much. Have a great day. Bye-bye, guys.
Thank you. Bye-bye.
Bye-bye.